So I promised you guys that I would do an earnings review and a stock update on Tesla. So that's what we're gonna do today. Now, just so you know, I am recording this on Wednesday night. It'll probably be uploaded, I can't talk today, uploaded on Thursday morning. So there may be a little bit of a difference in terms of the price when you look at it. Also, just a quick update. I wanted to do an earnings review on Microsoft and Facebook as well, but I didn't want to make this a really long, huge video. So you might get multiple uploads from me today and possibly tomorrow. I apologize ahead of time. I don't mean to flood your inbox with a bunch of videos, but if you do have the time, I would really appreciate it if you do watch those videos. It really helps support the channel. It does mean a lot to me, and I don't normally do this. It's just kind of a one-time thing because we're just kind of going through earnings season right now. But with all of that said, let's talk about Tesla. We'll go over the earnings and we'll talk about a few different reasons why I still think that they have a lot of future potential, and we'll talk about all of that and a lot more in today's video. Let's get started. What's up, everybody? My name is Ala and welcome to my world of stocks. Now, I've always been bullish on Tesla, but I've never bought into the stock until recently. And the reason why is because number one, I kind of like the price where it was at, and number two, I see a lot of future potential in the electric kind of autonomous vehicle market for the future. So I bought into Tesla, and I had already bought into NIO as well, but both of them are very small. They're both the smallest positions in my portfolio because I still consider them to be more risky and more speculative than any other stocks that I own, especially NIO. Obviously, NIO is definitely highly speculative. But I still think that they both have a lot of future potential if the companies can execute. Now, looking at the stock today, it didn't really change a whole lot. It closed at $258.66, and then it dropped a little more after hours to $258.25. So it's really it's like basically stayed in the same dollar range. It kind of went up and down a little bit throughout the day, but at the end of the day, it just kind of ended at the same range. And that's actually pretty surprising to me because I thought that their earnings was actually pretty bad. But to be fair, our expectations were already pretty low for this quarter, and that's why the stock has been dropping a lot this year. Already down over 7% in the past week and down almost 25% year to date. Now, in my last video of Tesla, I mentioned that I was finally buying the stock in the $250 range, but I also mentioned that I was buying it very slowly in case it dropped more. So I'm actually glad that the stock didn't take off today, and I'm hoping that it gets dragged down lower in the coming days so I can pick up shares around this range and hopefully a lot lower to keep my average cost as low as possible. But looking at their earnings, we were now coming off of 2 straight quarters of profitability, but demand was also really high in their last quarter because of expiring tax incentives that were cut in half from around $7,500. But this quarter was much worse, with adjusted EPS coming in at a loss of $2.90 versus a loss of 69 cents expected. That's a huge miss, and as if that wasn't bad enough, revenue missed pretty bad as well, coming in at $4.54 billion versus $5.19 billion expected. So that's a miss of over $500 million, which is also a pretty big deal. Now, quarter over quarter, those revenues are down 37%, mostly due to low demand and seasonality, but year over year, sales were actually up 33%. So that's still really high sales growth, despite the kind of drop from the previous quarter. Now, profits, however, are a different story. GAAP EPS was down 626% from the last quarter and still down 2% year over year, while adjusted EPS came in 250% lower from the previous quarter and still down 13% year over year. So that's still pretty significant. In total, that puts their losses at over $700 million for the quarter, which is obviously pretty bad. Now, looking a little closer at their auto sales, again, auto revenue down 41% from the quarter, but actually up 36% year over year. And then check this out, the Model S and the Model X are just seeing their numbers completely plummet right now. Production was down 44% over the previous quarter and down 43% year over year, with deliveries down 56% quarter over quarter and 45% year over year. So no matter how you slice it, we're definitely seeing demand and, also, to be fair, production go way down for the Model S and the Model X. and that's mostly because of the Model 3 kind of taking over. But thankfully, they are releasing some new upgrades to those other models that include longer ranges and better performance, along with an interior refresh. But only time will tell if it's enough to bring back demand. For now, it looks like most of the hope is on their Model 3 and possibly their upcoming truck and then their cheaper SUV called the Model Y. In any case, Model 3 production did ramp up a little in the quarter, but deliveries still fell by 20% quarter over quarter, although it obviously had a huge surge year over year because of production finally ramping up towards the end of the year. Now, when looking at the reasons for the drop, Elon Musk noted logistical challenges, which is due to this being the first quarter of the Model 3 being delivered outside of North America to overseas markets like Europe and China. And that, coupled with a massive number of cars being shipped from the lone factory in California, resulted in longer shipping times and more vehicles in transit. Keep in mind that they had already referenced these challenges a while ago, noting that it forced them to move a large number of their vehicle deliveries into the second quarter rather than the first. So hopefully that'll help boost some of the numbers a little for Q2, which they are guiding to be as high as 100,000 deliveries. And even with all these challenges, they are still reaffirming guidance of up to 400,000 deliveries for the year. And they noted that if their Shanghai factory, their Shanghai Gigafactory is fully up and running by Q4 of this year, then they think that they can produce as many as 500 million vehicles for the year, which would obviously be a significant milestone. By the way, Musk also mentioned seasonality and noted that people don't like to buy cars in winter, which is funny as that sounds, I actually do agree with him. If you look at a chart of US auto sales, you can see that they always have the biggest drops at the turn of the year, and then sales go way up around summertime, so I'm not really surprised by this at all. And one last thing that I'll mention is that they ended the quarter with well over $2 billion in cash, which should keep them going for a while, but Musk did say during the call that there's merit to the idea of raising capital, so we'll have to wait and see how that all plays out. In any case, other than the huge market potential of electric vehicles that I detailed in other videos, I'll now give you 3 other reasons why I still like Tesla at this price or anywhere below it. Number 1 is the future Model Y, and that's a smaller crossover SUV that is only going to cost $39,000 at the cheapest version. Now, while it is true that the cheapest version won't launch until 2021, and I'm definitely worried that a lot of potential Model 3 buyers will wait for the Y since it is only about $4,000 more than the cheapest Model 3, I'm still bullish on the idea that you can literally own an all-electric Tesla SUV for only $39,000. That just sounds insane to me, and with how popular SUVs have become in recent history, I think it's going to fly off the shelves, so to speak. By the way, the US compact SUV segment climbed by double digits last year, making it the largest auto segment in the US and about 50% larger than the next closest segment, which was large pickups. So there's definitely a lot of demand for SUVs, at least here in the US. Now, reason number 2 is that they mentioned they will probably launch a new insurance product next month, which we all know is incredibly lucrative and high margin. Musk also alluded to the fact that they can use driver data to help set rates, so they can pretty much tailor make these plans for their customers and ideally offer more competitive pricing that will help attract more customers, ultimately bringing in a ton of recurring revenue. And what's pretty crazy about it is that Musk was very open about the fact that they can literally charge more to people who drive more dangerously because they can track their driving. On the bright side, anyone who drives more safely will probably get much lower rates and discounts, and we know that overall Teslas are much safer, so I could see this new venture being a great success if it's done correctly. And finally, reason number 3 is that Musk recently announced that they may reach full autonomy by 2020 and that they have plans to launch a robo-taxi service with potentially 1 million of them on the road by that same year. Now, that would mostly consist of Tesla owners lending their vehicles to the taxi fleet and then Tesla supplementing the rest of the fleet with their own vehicles. But apparently Tesla would collect around 25 to 30% of the revenue generated, which could potentially be around $30,000 a year. And that's pretty crazy when you think about it, because if you loan out your Tesla in your spare time, you could potentially pay the whole car off within a few years and it'll basically pay for itself. In any case, this is one of the reasons why I'm too scared to invest in Lyft or Uber. I know that they're both looking into autonomous functionality and driving and stuff, but I really think that the future of the kind of taxi service market is going to be autonomous driving. And when I look at that market, I don't see anybody ahead of Tesla and maybe Google. So those would be kind of the biggest plays on it in my opinion. But again, at these prices, I am liking Tesla. I'm hoping it goes down a little bit lower. I'd love to get some lower prices, love to pick up more shares if possible. But at these prices, I do feel pretty confident about my investment because I do think that Tesla has a lot of future potential. I know there's a lot of bears out there, a lot of people disagree with that, but it's just my opinion. Anyway, I think that just about does it for this video. Make sure you leave your thoughts and comments down below in the comment section. I'd love to read them. And hit the like button if you enjoyed it. I'll see you guys in the next one. Take care. Bye-bye.